Bitcoin is retesting a major 63-day long uptrending support line. A breakdown from this level will result in a brutal correction for Bitcoin. Can we expect Bitcoin to bounce from this level? Is this the end of the short-term downtrend? Do we still expect a higher timeframe correction? And will Bitcoin break down from this major uptrending support line? Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be taking a look at Bitcoin's price action, discussing the major 63-day long uptrending support line and the current retest of it. Will Bitcoin bounce from this level? Is the short-term downtrend over? Or will we see a correction from this level? If so, how low could Bitcoin go? We're also going to be taking a look at the macro charts, discussing why we believe Bitcoin will likely still see a correction on the higher time frame. Mind you, a healthy correction before we enter the next phase of the 4-year cycle, going into the next bull run. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos on Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic events. If you are interested in trading, you can join our VIP group. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You will also get access to our group chats, our general chat, our trading chart and education chat, our news chat, our help chat, our daily video chat, and of course our trade setup chat. If you're interested in getting access to that with over 600 members, contact us in the pinned comment of the free channel for more information. Let's go ahead guys and dive on right into the video, starting on that market data. So coming into the new week, we do generally see volume and volatility start to increase. With that, we do see a little bit more choppiness, a little bit more movement in the market, and with that we see more liquidation. So overall 24-hour volume is up close to 10%. We're sitting at a total of 86 billion. 24-hour liquidations are up a total of 23%, sitting at a total of 131 million. Looking at the 60 and 30-day volatility index, not all that much has changed as of right now. The volatility is still moving with the direction of price action, so that is obviously what we like to see. Discrepancies are warning signs when it comes to volatility, so that is overall still looking decent. Looking at the overall liquidations, with 31 million in liquidations, 100 million have come from longs, with a vast majority of that coming in the last 12 hours, and 30 million have come from short positions. If we take a look at the last 4 to 12 hours of Bitcoin's price action, we can see we have had a lot of chop, actually seeing quite a brutal correction on the 4-hour chart, a few percent toward the downside, retesting that major 63-day long uptrending support line. Moving over to the DXY guys, we can see the DXY is still temporarily attempting to bounce from this level. Again, we did note out in yesterday's video, we had a bullish divergence developing at this level. We have a few different options a DXY could undergo. Number one is that we remain underneath this horizontal green line. While we remain underneath this horizontal green zone, the projected direction for the DXY is still downwards, as this is a major area of resistance. We still do expect a move towards our lower level of support, which is at 101 to 101.5. However, if we are able to break above this level of resistance, that is when we'll be retesting this downtrending diagonal resistance, and a break through that level will send the DXY back into a short-term uptrend to likely retest the higher time frame downtrending resistance. A break through this level will actually send the DXY back into a high time frame uptrend. So again, a few different scenarios in play. Overall, the DXY is in a downtrend. However, it is showing early preliminary signs of a reversal developing. And of course, if we do see the DXY go up, this is generally going to be bad for asset markets. Looking at the S&P 500, we have failed to close that candle above the weekly close high as of right now. We are still pushing slightly above it. However, we do want to see in 4 days and, well, just over 4 days, so about 5 days now, we will be closing this currently weekly candle close, and we would like to see that one close above the all-time high right over here. A break and close above this level will result in a continuation into price discovery. And again, it is very hard to say where the S&P 500 will go when it does enter price discovery, other than this major level of resistance, which we are currently testing, will be turned into a support, which could facilitate a continuation higher as it develops a higher base of support. If we fail to break above here and we close under reject, this area will still be a current resistance, and we could theoretically come all the way back down to retest this local high point right over here, sitting around 4,600. Moving over to the Dow Jones. The Dow Jones is well ahead of the S&P 500, and if we had to assume the S&P 500 is going to move as what the Dow Jones has done, we would assume the S&P 500 is going to continue through this level, as it does look like it is about 2 weeks behind in terms of what the Dow Jones is actually doing. Looking at the Dow Jones, we have closed a weekly candle above that all-time high. We are in this price discovery area, creating new all-time highs on the daily. Again, this level was resistance, is now support. All we can say for sure is we're looking for a continuation higher until we start developing weakness. And if we do correct, we're looking for bounces from this area support. If we do lose this area support, we do run the risk of correcting, just as we showed you on the S&P, towards this lower high around about 35 to 36K. Let's go ahead, guys, and jump over to Bitcoin. And before we do, a quick word from Bitget and BingX, and we'll dive right in. I wanted to briefly interrupt today's video to discuss the 2 exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump into Bitcoin, and we got so much to talk about today, guys. We're going to be discussing the short-term price action. We're going to be discussing the daily and weekly price action, the momentum, the current trend, the likely directions of Bitcoin, potential targets or corrections, why the correction, if it occurs, would still be considered healthy, and of course, the high time frame analysis, why you shouldn't be worried about a correction according to the 4-year cycle, what the technical charts are suggesting on the weekly, and of course, a broad monthly analysis. So much to go over, but we'll start on the most pressing event that is occurring right now for Bitcoin, which is the retest of the major 63, so 2-month-long uptrending support line. Now, guys, this is of absolute significance. It is massively important, as this trend line represents the overall upward trajectory that Bitcoin has been moving in for the past 2 months. In fact, ever since we established the base of support before we broke upwards. Remember, we had the fake ETF news come out over here. That was the fake ETF news, resulting in a massive rally over 28K. Then we had the hype. Okay, the hype of the ETF being priced in, pushing the price upwards. We developed a base of support. We've been continuing upwards ever since, and we have that high time frame uptrend right over here. So this entire rally has lasted ever since that 2 months ago, that fake news event, that was what started this rally. So it's been a long-standing uptrend for Bitcoin, which has taken it through a 28K resistance, the 32K resistance, the 38K resistance, even taken it through a 40K resistance. So it is a significant trend line that we are now retesting, and if we fail to hold, could result in a correction. But first and foremost, guys, let's go ahead and show you something else. We do have this uptrend over here, which is very important, but what we also do have is our momentum. This is going to be our market cipher B. What we can see right over here is the momentum is crossing on the 0 point line on the histogram right over here on the right hand side. What does this tell us? It tells us we are exhausting, and it tells us momentum could potentially be about to flip negative. Now, I'm not going to say it is flipping negative because it hasn't done so yet, and I'm not going to say Bitcoin is going to correct because we haven't flipped negative on the momentum and we haven't broken down from the trend line yet. However, if we do see this negative momentum flip, the probability that this uptrending support line fails to hold significantly increases, guys. And this is going to be very bad, as it would be the first time we flipped negative in terms of momentum ever since we broke above 28K. This would be a very bearish sign, and this would result in a correction. I would like to add, when the price action fully exhausts into support, the probability of a correction begins to increase. However, support is support until it is not, and generally the price looks the weakest before it does bounce. So in that statement, it does mean we are getting very close to a validated, confirmed breakdown that would actually push the price lower. However, we're right on that tipping point, and until we flip over, we cannot be absolutely confident that we are going to see that short-term correction develop. We should still, in the back of our mind, be believing that we are at support. Yes, we are seeing signs of exhaustion. However, guys, support is support until it is not. The moment that support line is lost, that is when we'll flip our trend bias and expect a short-term correction. But we need to plan for it anyway, right? You need to have a plan to prepare and to act on if any event occurs. So let's talk about what we would expect if this trend line broke down. If this trend line broke downwards, we would easily expect, and this is a very obvious move, a move into the high time frame level of support, which is the 38 to 40K range. Okay, let's zoom out. 38 to 40K range is going to be its high time frame level of resistance. It is actually now a level of support. So we'll go ahead and change it over to green. This is going to be our target zone if we do break down. On the 4-hour chart, you can see we have just touched it once more, bouncing. You know what? If I was trading right now, I'd probably chuck along with like the tiniest, like 0.4% stop loss just for fun, just to see how we go. I'm not going to do it because I'm in the middle of the video. But again, this is kind of where we're looking for potential longs, because the risk return is very, very favorable for a bounce, since your invalidation point can literally be like not even 1% toward the downside with so much potential upside. Again, guys, let's go ahead and zoom out. If we do see that breakdown, right, we haven't seen it yet. If we do see that breakdown, where would I expect Bitcoin to go? I would expect Bitcoin to go down to retest the uptrending dotted trend line, which actually inhabits this area between the 40K and the 38K support line. So I'm expecting something along the lines of that. Maybe not a straight line. We'd obviously see the price gradually move downwards. I'd be expecting a retest of 38. Now, 38K, or should I say its uptrending trend line around 38.8, is a major area of support, guys. This actually reflects the uptrend that we have been in ever since the consolidation developed around here. We had that symmetrical triangle formation. We broke upwards through 40K. That uptrending level from the symmetrical triangle dragged across is reflected by that dotted trend line. So it's a major area of support. And technically, if we go down to the smaller time frame, that level is actually going to be acting as not only a bearish trigger, but it is also going to be acting as the major uptrend, a flipping point between the trend on the shorter time frame. Meaning, while we remain above this level, technically this uptrend that we have developed is still intact, and we'd expect a continuation upwards. When we break below this level, the uptrend has been lost, and we would expect a continuation downwards. So to zoom out, this 63-day long uptrend has crossed over and is sitting above the dotted trend line. Therefore, it takes initial precedent over the dotted trend line. A loss of this solid trend line will likely result in a correction to the dotted trend line. When there, at that point, the dotted trend line will become the primary level of support for the current trend on Bitcoin. So those are the levels we are looking at from a support perspective. Let's go ahead and take a look at potential corrections and moves. If Bitcoin does move down, and by moving down, we'd have to lose this trend line, which is reflected as this uptrend, this solid black trend line, we would likely see a correction down towards the uptrend, a dotted trend line. In this instance is the solid trend line. Again, this is an area we would expect bounces from, as we have reached an area of confluence between our horizontal support, which is the 38 to 40k level, as well as our diagonal support, which is going to be this uptrend represented by our ascending triangle uptrending support line extended acrossward. Okay, very important level. If we lose that trend, if we lose this uptrend level, that is when we expect a correction to 38k, and 38k is a high time frame support on a horizontal scale and a bearish trigger point, meaning a loss of 38k will likely push the price action all the way down to 33.3k, which is going to be a bearish trigger point and support the range low of the initial first point of retest within this uptrend. And of course, a loss of that level will result in a clearance of the VRPV gap and a retest of the scam wick high all the way back at 30,600. So we do have potential to move down. We have a whole bunch of support below us, but the two most important levels are, of course, the current uptrending support, which will facilitate a correction in the short term, and that dotted trend line, which is kind of holding that 38 to 40k level of support and the overall trend for Bitcoin on the higher time frame. A loss of that level will be catastrophic, as it would result in deviation above 40k, and we have this entire gap, okay, between 38 to 32 that we could move down between, okay? Very, very dangerous stuff. So definitely keep an eye on that. If we're looking for corrections, if we're looking for short-term pull downs, I'd be watching those potential levels. If we're looking for a move upwards, guys, we do need to break over the same levels we're discussing in yesterday's video. We have the short-term downtrending bullish trigger, this diagonal trend line, okay? And of course, we've got our range high trigger reflected as that 44.3k level as this area of resistance right over here. A break above our downtrending trend line will result in a move upward to 44.3, where we would either correct from again, or more likely, if we retest, we would be breaking above that level into that 46 to 48k range. So those are the short-term trajectories. Those are the overall predictions for the short term. You have a plan for both scenarios. You just need to now execute. Now, this is where things get a little bit complicated. If we go over to the macro chart, we have a few mixed signals this cycle. In comparison to last cycle, we had very definitive and a very clear pattern. This cycle, we are starting to see things that haven't really occurred in prior cycles. One of the main ones is the baseline of the Ichimoku cloud is being retested, okay, prior to the break of the dotted trend line and prior to April 2024. So in this instance, we are kind of following what we saw back over here in 2019, not what we saw back in 2016. So we'll give you a quick rundown. Generally, when we look for the bull run to start, we look for two things. We look for, number one, a monthly candle close above the dotted trend line. We can see over here. We can see over here, okay, the monthly candle close above the dotted trend line. The dotted trend line is simply the dead cat bounce high. The dead cat bounce high of the prior bear run, okay? The initial dead cat bounce high of the prior bear run. The solid trend line is the lowest point the price reaches before that dead cat bounce high, but the dotted trend line is the most important one. And number two, we look for a monthly candle close above the baseline of the Ichimoku cloud, which generally occurs on the halving or after the halving. So in this instance, we are retesting the baseline prior to retesting the dotted trend line prior to the halving. So we're seeing three different events actually play out at once. What this tells us, it gives us two potential scenarios. Scenario number one. We fail to close a monthly candle above the baseline this month. We move into a downtrending correction until past the halving, okay, April 2024, where we eventually break over the baseline and then break over the dotted trend line into the bull run. Scenario number two, we see a short-term rally to 48 to 46k within the next 14 days. And we close then under the baseline, again resulting in a break above and failure to break above close a monthly candle above the dotted trend line and correction under the baseline, just as we saw in 19. And scenario number three, we close a monthly candle above the baseline prior to April 2024, which would initiate the start of a earlier potential bull run. Now this would be the worst case scenario, as we would delete or throw a spanner in the works or a curveball in terms of the overall structural pattern we have seen play out in prior cycles. Okay, let's go ahead now and move over to this chart, the chart we were talking about yesterday. If we take a look at this chart over here, we can see we have the price action overlaid, okay, on our vortex indicator. We can see the vortex indicator has a clear trend over here, downtrend, 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 okay, diminishing return model is expected. The overall length of the trend and strength of the trend starts to diminish over time as the rate of return obviously diminishes with obviously as the market cap becomes larger, okay? So we generally see that in an overall downtrend. We are still expecting a retest of this level. Now, if we do retest that level, it is likely Bitcoin will reach 46 to 48k. However, then we have the problem, which is if we retest 46 to 48k in the next 14 days, we need to close a monthly candle under the baseline according to historical data to keep the 4-year cycle in check and moving as per our historical price action. So a lot of stuff going on, very confusing stuff. Sometimes it's just best to zoom out and watch the short term, trade based on what the short term is doing, rather than getting too caught up in all these different indicators and all these different things on the macro. However, it is important to watch as it has been very, very accurate in the past, particularly in the last year. We have used it many, many times to predict these moves, and it was likely going to be a key element at predicting exactly when the next bull run will start. So to summarize everything, guys, really quickly, the short term is beginning to look really weak. You can actually see we're breaking down over here. Momentum is beginning to turn negative. If we do see a negative momentum flip, we could see a correction on Bitcoin. While we remain above this uptrending dotted trend line, we are looking still healthy on the higher time frame. If we break down from here, that is when the bears actually properly, fully take control and can push the price significantly lower. If we zoom out a lot, the lowest the bears can push the price before the bulls completely lose control is going to be this uptrending support line represented by this black line. If the price action loses this trend line at any point, the bears have completely taken control. The price enters a new macro monthly downtrend, and judging by how close we are to the halving, that could potentially throw a massive spanner in the works in terms of the next 4-year cycle, or the next bull run, should I say. So short term looking weak, breaking down, watch out for that. We could see a bounce. If you're taking longs, do so here. It is the last chance you can with a very, very tight stop loss before we would expect a correction lower. If we do see the breakdown, expect a correction lower, potentially low as 40,000 to 38,000, more likely towards a dotted trend line where we would expect a bounce to occur from. If we fail to bounce from a level, expect a correction much, much lower following the key structural and technical levels on this chart over here. If we break upwards, guys, we are looking for a continuation past 44.3 as the main source of resistance into the 46 to 48k range. If we see 46 to 48k, it is unlikely we are going to close a monthly candle above there. According to historical price action, we are due for a correction. We are likely going to see a failed monthly candle close above the baseline until at least April 2024, which tells us we could see a downtrend developing. Thank you for watching. Hope you have a fantastic day. Again, today's video was all over the shop. We've got so much to talk about. It is a very confusing video, so take your time to go through each bit by bit, focusing on exactly what you want to hear. And guys, I'll catch you in the next one. Cheers.